gentlemen, good day and welcome to the Rishabh Instruments Limited Q1 FY2025 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair. Thank you, and over to you, ma'am.
Good evening, everyone, and a warm welcome to the Q1 FY25 earnings call of Rishabh Instruments Limited. We have the management today being represented by Mr. Narendra Golia, Chairman and Managing Director, Mr. Dinesh Muslikar, CEO, Mr. Vishal Kulkarni, CFO, and Mr. Anand Lada, Finance Director of Lumel. I'll now hand over the floor to Mr. Golia for his initial remarks, post which we'll open up the floor for Q&A. Thank you, and over to you, sir.
Thank you, Bhumika. Good evening, everybody. Welcome to this earnings call, conference call, where we will give you the results of the first quarter of the financial year 24-25. And, of course, answer any questions that you may have. As usual, along with me on this call is our Group CEO and now Executive Director, Dinesh Muslikar. We have our Group CFO, Vishal Kulkarni. We have Anand Lada, the Finance Director at Lumel, both the Lumel entities, and our Investor Relation Advisor, Strategic Growth Advisors, SGA. We have already uploaded the first quarter 24-25 year results and investor presentation on the stock exchanges, and probably many of you would have had a chance to look at it and formulate your opinion on it. As a company, as a group, we have achieved a consolidated revenue of about 1,693 million. If we talk in Indian rupees, then about 169 crore rupees in the first quarter, which is down by about 1.8% on a year-to-year basis compared to last year. The decline in consolidated revenues is mostly on account of cautious approach towards the aluminium die casting business. People who have attended the earlier conference calls know that we have given you a warning that aluminium, especially the automotive business, is not doing so well. So we have allowed a little slowdown in the automotive business, especially because European environments at the moment are not the best. A lot of churn is happening in the EV industry, and also there is a big issue with the European utilities, and we'll talk a little about it later. Our electronic business, both in Poland, India, and in China, which includes the electrical automation, metering, control and protection devices, portable test and measurement instruments, together achieved a revenue of about 939 million and achieved an adjusted EBITDA margin of about 16%. Our solar business has also grown multifold and gives us confidence that we will achieve the guidance which we had given some of you in the earlier calls to reach about 100 crores in the next 3 to 4 years. In India, we have started the construction. We have two facilities in Nashik. Again, people who have visited have seen it. One was the R&D center and one was the main factory. Now, both places we have started construction. Both the places we are making a basement, ground and 6-story building. All in all, we will nearly double the surface area that we have, and therefore obviously all core segments, especially on the electronics, and we expect that it will be operational by January 26. There was some delay in starting it from the time we came with the IPO because you need various permissions, and in India usually these things take more time than you plan for it. Similarly, in Lumel SA, we are in the process of finalizing the orders for the new assembly lines and new SMT lines for increasing our strength in the EMS business. Many of you know EMS is a very good business. It's electronic manufacturing systems. And we have actually done it as a captive business, but once we have made the investment, then we also do it for other people. So regularly we get inquiries for EMS business. We have started that as a separate vertical in Poland and in India. Again, more on that later. Next point I would like to stress to you is that there's a very healthy demand in the electronics business and a good momentum in the domestic markets in India. Although I told you Germany and Spain are going through some upheavals in the electrical distribution industry, but India is robust and all our government policies are supporting it. Similarly, Lumal SA has been doing well because of the markets that they cater to. We believe that this additional facility and SMT lines will help us address the growing market. In the first quarter, our business in Lumal SA has delivered a revenue growth of 22.4% on year-on-year basis and a 14.5% on basis of quarter to quarter. In February 2024, Lumal SA has won a project for the development of control and protection devices for strategic areas of the energy industry and innovative technology for their production. Based on a fully automated production process and quality control of devices under the European Funds for Modern Economy program. Many of you know European Union is really helping modern industries, and we have one of those programs. The execution of this project will be over the next 3 years, and we see a momentum in electronics business, even otherwise, more so with the installation of this new equipment. Moving on to the aluminium die-cast business in Poland, which primarily has two segments. One is the automotive industry and one is non-automotive, which we call it automation. As we have said in our previous earnings call, that we plan to focus more on our non-automotive business, although the volumes are not as large as the automotive, but obviously we have a much more higher EBITDA margin than we have on the automotive business. And once we do that, we are sure that we will be able to generate sustainable EBITDA margins. The automotive business, where our margins have suffered because we were not able to pass on the price rise to our buyers, as I said, who are large EV OEMs. These OEMs have signed long-term contracts with Lumal, and therefore there are stringent clauses on termination. But it is important to note that with our intense efforts, we have been able to renegotiate some of the stringent clauses with one out of our two customers, and we expect to come back on track in the coming 2 quarters. Our team is working extremely hard on this, and we'll be glad to know that we have been able to stabilize 1/3 of this automotive business as well. I'm also glad to announce just 3 days back, we have done a 100% acquisition of a modern SCADA software company in Czech Republic. This has been done by our subsidiary Lumal SA, and Dinesh will give you a lot of details about what we have acquired and why we have acquired this when he talks about this. This software will really help modern industrial systems to operate efficiently and effectively. It serves the market need of intelligent and user-friendly solutions for monitoring and optimizing energy processes, control systems. I can go on and on, but for the limited time that we have, I will hand over the speaking to Mr. Dinesh Muslikar, who will talk a little more on granularity of the business we have come across the globe, along with our strategy and highlights of key operational performance for the quarter gone by. As I said, he has been he's Executive Director and CEO for the whole group. I also use this opportunity to thank our entire team of Rishabh Instruments, Lumal, V&A, CFAM, Tinsley, all the subsidiaries we have all over the world who have constantly supported us in our ambition to become the leading global energy efficiency solution company. Thank you, and over to you, Dinesh.
Thank you, sir, and good evening, ladies and gentlemen. As you are aware that there are global uncertainties leading to weaker economic environment across Europe and Western countries. We have, in spite of all of that, we have achieved a consolidated revenue of rupees 1,693 million in Q1 FY25. The consolidated adjusted EBITDA stood at rupees 109 million in Q1 FY25. Our business performance is primarily driven by increase in Rishabh India's domestic performance and growth in performance of Lumal SA business, particularly electronics. The Rishabh India domestic business has grown by 10% year on year, and Lumal SA business, as Mr. Gulia mentioned about, is increased by 22% year-on-year basis. Even though the demand in European market remains subdued, which impacted partly Rishabh's export business into Europe. However, our Linnell SA subsidiary has been able to capture greater market share due to our strong legacy in the European market, along with our core expertise in providing value-added services across automation and turnkey projects. So we do a lot of activities which are not basically only supply of products, but more value-added propositions. That's what has helped us in Linnell SA electronics business. On our aluminum die-casting business, we remain conscious on growing this business going forward, and particularly in automation sector, and focus more on cost efficiency measures. Now, coming to our electronics business, which includes electrical automation, metering, control, protection devices, and portable test and measuring instruments. This has delivered us a revenue of rupees 939 million in Q1 FY25. The top line of Rishabh electronics business in India has degrown by 7.2%, mainly on account of subdued export demands, particularly the demands in Germany and Spain have dropped compared to what it was in the last year. The top line of Linnell SA has grown by significantly 22.4% year-on-year basis. The electronic business constitutes approximately 55% of the consolidated top line. And this has been a healthy growth in Linnell SA. In electronics business, has a stable and sustainable EBITDA margin ranging from 15 to 17% across both our territories, if you are looking at our electronics business separately. So we have no issues on the profitability. On the top line also, we are more or less good, and if exports in Rishabh continues to our normal guidelines. And the other positive that we have is in the solar string inverter business. We have been able to get good momentum here. The revenue have grown up by 204% compared to last year, and quarter-to-quarter basis we have grown 126%. This business looks promising, and we are intensely working on the potential excellences and cost efficiencies to increase our margins. With our intense efforts, we have been able to reduce manufacturing costs by 5 to 6%. But we are having another 10 to 15% cost competitiveness to bring in, and this will be getting by redesigning and alternate components, which is a work in progress now. So this robust momentum and boost on solar spending during the budget speech by Indian government gives us confidence to achieve our guidance of making this rupees 100 crore business in next 3 to 4 years time. We are also at the advanced stage of development of our single-phase inverters. By end of December, we should have that. This will cover a range from 2.5 to 6 kilowatts, which is a booming market in India and supported by various government schemes. Moving forward, our die-casting business, which is situated in Poland, caters to two major industries, automotive and non-automotive. Non-automotive is basically automation, what we have. We plan to focus more on this automation business, which is about 50% of our die-cast business, and has been generating sustainable EBITDA margins. Now, the automotive business, which represents the balance 50% of our die-casting business, revenue is undergoing a transformation phase here. In this business, we largely supply to two major EV OEMs in Europe, and these large EV OEMs have entered a long-term contract, as explained a while ago, with us on a critical components of EV with stringent clauses when it comes to price escalations and terminations. Due to sudden increase in power costs, minimum wages, we are not able to pass on the increased input cost to these buyers, and we had to incur losses due to our contractual commitment. And we have been fighting hard to renegotiate these stringent terms for a while now, And last 3 to 6 months we have been struggling a lot with this. And on a positive note, we have been able to negotiate with one of the two major clients. And we are also constantly working on cost efficiency measures here and remain continuous to increase our revenues from this business. Further, I would like to say that with the first OEM, 1/3 of the projects we have got price increases. Another 1/3 projects we agreed to relocate to another supplier from their end by end of October. So until such time, we are bound to supply them with the same contractual prices. And we will continue to have uneven journey on these for about next 3 months. For the remaining 1/3 of the project, we are in progress of negotiations and we are deeply engaged with them and expect a resolution in the next 2 to 3 months time. The other, this is with the first large EV OEM, and the other large OEM, we have started renegotiation because we didn't want to take on both of them at the same time. Now we already started with the second EV OEM, and we are expecting this to be concluded in next few months. We have presented our cases with cost breakdowns and had several roundtable discussions for price increases or termination. Either you give us the price increase, and if it is not going to be feasible, then we are ready to terminate those contracts. We are ready to reach a consensus. Until then, these projects will also continue to pinch our pockets. But we are of the firm belief that we'll be able to reach to consensus in next 1 or 2 quarters. In a nutshell, we will have some bumpy rides until Q3 from this part of the business, and we are really working hard to stabilize the same. We are firm and positive that things will change, and we have taken a lot of actions, and we believe positive results in the future from this part of the business. Now, it is important to note that apart from the automotive business, we have plans to focus more and grow the non-automotive and electronics business at a very healthy rate. We are having good order book and demand in electronics business and non-automotive die-cast business. Further, our continued focus on R&D is helping us to develop and launch new products, and we have some new range of products which have been almost ready or in the launching phase. I'll just list some of them. They are really going to make a big dent into big spike into our top line revenues. First one is this. We spoke about inverters, solar inverters, the new range of single phase inverters. This is targeting the Indian market. Then MIT certified energy meters. These are specifically very popular in EU and UK market. So these are 27 types of these products are all ready, and we are going through a final certification process to have these MIT certified, and that will open up our new avenues in the European market. Then UL certified NC current transformer CT for the US market. So this is already completed, and we launched that, and we already picked up some good orders from our subsidiary in USA, Kifam Tinsley, USA. So this also opens up a lot of our market. As you recall, current transformers is one of our cash flow, and this was not so much sold in European, American market because of different standards and different certifications which we have gone through now. Then bin mounted DC energy meters. These are particularly useful in EV charging stations, and this is also a product which is going to give us new revenue streams. Digital as testers, compact insulation testers, recorders, KD, and there are a lot of other products which are also added to the basket. So now talking about the R&D, we are in the process of setting up of our next R&D center in IIT Mumbai. We did mention about that in the last call also. This is basically focused at development of breakthrough products. So we'll have this R&D center based in IIT Mumbai campus, and this will give us full access to the IIT ecosystem, which includes advanced world-class labs, faculties, students, and we will be focusing on something which will be breakthrough not only for our company, for the industry also. And during the Q1 financial year 24-25, we have added complete, this V&A product from China. If you remember the Chinese acquisition which we had made, the whole basket we have added into India. So India market will be, Indian sales and marketing team is selling those in Indian market. And then 100 amps direct current energy meter as a new product designed and developed from our R&D center. We also have about 15 products in pipeline to be added in this financial year. And we target to achieve about 10% incremental revenues from the products that have been added in this year and last 2 years. This is generally what we plan to have, so that we are also all the time at the forefront of the technology. So all of this also comes due to our commitment for R&D investment, which is about 2% of our revenues we invest back into R&D for design and development of our products. Now I will talk a little bit about market opportunities in different businesses that we have. Let's start with Rishabh in India. We think there is a ton of room for growth for our company in Indian market as well. During the budget statement, the Indian government announced more expenditure on infrastructure projects, which will present more opportunities for our expanding product line, gain market share. So we have a lot of potentials in Indian market there. Our products are seeing greater demand in India as the country's infrastructure and economy expands. We appreciate that this will have a direct effect on our performance. We have seen some spillover of export orders from Q1 FY25, but we believe we will be able to grow India business at a double-digit rate. And next we can talk about Lumel SA, the electronics division in Poland, which is growing, and it is very evident that quarter to quarter and year on year we have achieved good results here. We are becoming stronger years on year, mainly attributed to higher government spends in energy transition infrastructure. As a result of this, company's growth in the green energy, industrial automation, medium voltage segments have been exponential. To cater to increasing demand, we have also made an investment in the third cutting-edge dedicated SMT line that will only service Lumel's EMS business, which is electronic manufacturing services. So like how we plan to do it in India, we do it in Poland also. Now the next company update is opportunities for Lumel Alucas. We have already discussed, but yes, on the positive side, we are creating several essential product lines specifically designed for the rapidly changing, very futuristic EV technology landscape. We provide important components such as cooler systems for battery aggregate, throttle bodies in engine parts, compressors, seat belt safety, brake safety, HUD, etc. These are operational parts with very high quality and safety requirements and characteristics for EV OEMs. We are deeply steadfast in our commitment to returning to die-cast company to the intended level of profitability. So to give more perspective on that, the whole EV industry in Europe is going through a lot of losses because they are trying to catch up with the late start in EV technology in Europe compared to say USA and China. So there is a lot of pressure by the government bodies to turn around very quickly, and this is putting stress and a lot of cost to everybody in this chain. But it's a technology which we are investing in. So we will fight this battle with making it balanced and to have some agreement with our customers to make our projects profitable. I'll update a little bit on China business because a lot has happened in the last quarter there. Through our Chinese setup, we'll be able to acquire some raw material, electrical components used by Lumel SA and Indian companies. So this activity we have already started. Additionally, it will also help us to increase our sales through our global network. So we have launched China products through dedicated team in product development team in Rishabh and through our entire sales network. And we have taken a target of 30 million rupees for this financial year, which I am sure that will beat that. And similarly, we have added area sales manager in Lumel SA to take these products in European market. Apart from that, we are taking these products to Sifan Simply USA and Sifan Simply UK to have a much larger access to the market. And we are also looking for adding another person for another avenue for purchase of electronics and capital goods to China, so that we can have cost reduction for the whole group. And we also added one area sales manager there to sell Lumel products in Chinese market. So there's a lot of strategic things which keeping in mind, which we had bought this company. We have started executing all of them. Last but not the least, as Mr. Golia spoke a little while ago, I would like to highlight our recent acquisition, which is about just 3 days ago. This acquisition of Microsys Spol SRO, which is like Microsys, it's a private limited company. It's a 33-year-old Czech Republic company, and its product is SCADA, and the company with their iconic brand Promotic, which is quite popular in Europe. And this is used in industrial automation for process and energy management applications. This is for us is a forward integration, and this software product will help us to boost sales of our IIoT. This is industrial Internet of Things based products which we already have. This will help to integrate those with the software, and our customers will have a higher value addition. We will also use our global network to promote and sell this SCADA in all possible industrial automation projects around the world. Apart from this team is highly skilled software engineers. The two gentlemen who formed this company have got about 40 years of software development experience, and another 10 engineers we have who are with minimum 10 to 12 years with the software company. In the software company, 10 to 12 years is pretty long period to have an experience, and these guys can help us to develop some very high-end softwares like GUI, graphic user interface, for our advanced IIoT enabled product for say Lumel or Rishabh also. There's a lot of synergy which we can generate with this product. In nutshell, they have a fantastic software which can be integrated with our product to add value to our customers. So we can sell our products to their customer base, or we can add that product to our customer base, and with a higher value proposition, we can increase our customer base and also do a upselling. So this is the reason for which we acquired this company. In conclusion, our electronic division, which has been operating at a higher margin and profitability, our sales are still being driven by expansion of the industrial sector and the higher spending in infrastructure. We can grow substantially in worldwide market, especially in India, USA, and UK, with the aid of energy efficiency and industrial automation. So our present focus remains on expanding our global reach and consistently introducing new products. We have seen good feedback from current clients because of our quality standards, which gives us confidence to increase our market share internationally. We also continue to remain at a good capacity utilization levels, and with the new capacities kicking in, we will have enough headroom for continuous growth for the next 5 to 7 years. With this, I would like to hand over to Mr. Rishabh, our CFO, to delve into financial performance of the group. Thank you.
Thank you, sir, and I am grateful for the comprehensive summary. Good evening to everyone. Permit me to provide a quick overview of the company's financial results. Our Q1 FY25 consolidated revenue stood at INR 1,693 million, which is degrow by 1.8% on a year-on-year basis. The consolidated adjusted EBITDA remained at INR 109 million in Q1 FY25, which is down by 59% from year-on-year basis. The consolidated adjusted EBITDA margin stood at 6.4% in the Q1. The consolidated PBT was at INR 46 million in Q1 FY25, down by 59% on a year-on-year basis. The ESOP expense for Q1 FY25 stood at INR 33 million, and we expect another INR 82 million to be booked in FY25. I'll just the key financial highlights of the remaining companies. Rishabh India, the standalone revenue for Q1 FY25 stood at INR 527 million, which is down by 7.2% from Q1 of FY24. The standalone adjusted EBITDA stands at INR 76 million for Q1 FY25, which is down by 47% on a year-on-year basis. The standalone EBITDA margin remained at 14.4% for the Q1 FY25. For Lumel SA, our electronics business in Poland has achieved the revenue for Q1 FY25 of INR 490 million. This has been increased by 22.4% on a year-on-year basis. The adjusted EBITDA stands at INR 83 million for Q1 FY25, which has been up by 47.6% on year-on-year basis. The EBITDA margin stood at 17%. In Alucast, there is a flat growth in revenue in Q1 FY25 and remained at INR 684 million. The adjusted EBITDA stands at INR minus 46 million in Q1 FY25, which has turned negative from INR 5 million in Q1 FY24. All other companies in UK, USA and China have cumulatively grown by 15% in revenue and have contributed an EBITDA of around 3.4 million INR to the consolidated financials. On the consolidated level, we remain net debt free along with a strong balance sheet. The net cash and cash equivalents as on 30th June 2024 stand at INR 1,072 million. Thank you. Now I shall leave the floor open for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditi Sawant from ADM Advisors. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. So my first question is, just wanted to understand our outlook on the industry for Alucast business for next 1 or 2 years. As you know, there are few hinges we are expecting overall.
Okay. I think if you are talking on a horizon of 1 to 2 years, we really feel very confident about this business, because all that what we are trying to do is going to get over in 2 to 3 quarters time. So there are 2 scenarios which can happen. One scenario is that our customers will agree for the price increases, not to the level that we are asking, but somewhere we get an agreement, and then we grow that business. That's one possibility. Second possibility is that they will say that they will try to source this from China, because these are global clients. They have got multiple countries from where they can source. So some of these projects they also have dual sourcing, maybe one in Asia, one in Europe or something like that. So there is another possibility that they will say that we do not want to continue business, but until we relocate, you supply us. So we may have some losses for until we supply 1 quarter, 2 quarter, how much, whatever we negotiate and do that. And that's one part of it. Once that happens, we'll have this clarity in next 2 to 3 quarters time. After that, management will do 2 things. One is if we are retaining those businesses and growing, then we'll continue in that direction. If that automotive business is shrinking, then we will increase our, as it is we are increasing non-automotive business, we'll focus more on non-automotive businesses and we'll add more into that. And also we look at, getting some cost out of the business so that it remains profitable. So the focus for the last 10, 12 years has been to drive both top line and bottom line was automatically being driven. So until this, all these external factors came into picture, which were very high inflation, energy cost, and unprecedented labor cost increase, etc. So now the focus is for us more on the bottom line. So we want to scale up guide our top line based on how we perform on the bottom line. So that's like kind of a portfolio management which we'll be doing this year. And next year onwards, we are sure that we will get it into a positive direction. Maybe volumes can be, we have two situations. One, the volume will be good and the profits will be good, or volumes will be lower and profits also will maintain.
Okay, got it. But sir, then what is our long-term plan going forward in the alucals business, as we are looking to divest this?
So at the moment, we are not thinking in a short horizon. In fact, we were looking at some acquisition in India to support the cost side of it, and one due diligence which we are going through did not materialize so far. So we keep on looking for any opportunities. So as of now, we don't have a divesting strategy for this business.
Just to add to what Dinesh said, if you guys all remember, these two businesses were nearly giving the same EBITDA, and we were investing heavily. It's only this new business, this EV is a completely new line which has come in the last 1 year. And we thought it would be similar to our other automotive business, but unfortunately it has been more challenging. But we are learning, we have learned it. Therefore we either ask the customer to correct this prices, or then we will ask them to go somewhere else. But we will bring it back to the profitability. At the moment, there is absolutely no thought of divesting into the aluminum business.
Okay, got it. So just last question, if I can just squeeze in. That is, what is our overall impact on the margin? I mean, how much is the impact on overall margin from automotive segment? And, how long we feel that this will drag our margin?
For 2 to 3 quarters. So this is, only the aluminum die casting business, if I have to give some kind of a sense of that. So from last year to this year, it is gone to, minus at EBITDA level, it's about minus 6-7%. So you can look at that. That's the one biggest drag which has happened. And then even if we make it zero, our numbers will look much, much better.
Okay. Got it, sir. Thank you so much, and all the best for the upcoming future.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Payal Shah from Billion Securities. Please go ahead.
Thank you so much for the opportunity. I have 2 questions. First, please give more understanding on the new acquisition done by Numel SA into Microsyn software company. Like, what are the key synergies arising out of this?
I try to address that during my speech. So this Microsys is a SCADA software development company, and this company was established 33 years ago. It's a company with about 15 staff, and about 12 of them are very, very senior software engineers. So what they do is the software which is we have these products which are used for energy efficiency, or they are used for process efficiency, monitoring, etc. So these products measure and then this data is pushed onto the cloud. When we say it is going onto the cloud because IIoT enabled products are there, then it goes onto this system which is connecting to operating system of the plant. So it helps to take all this data which is collected from all these sensors. It's like a big data, and then you can develop a AI, artificial intelligence into the system, and those decisions are made, and they are either sent as reports, or they are connected to other machines, or to other systems. So all this new revolution which you see in the industrial automation, this is a link for us to make more onto those systems. So if we were selling the smart products, now what we can do is we can bundle the smart products and sell solutions to different industries. So the needs of say die-casting manufacturing industry can be different from a paper industry or a food processing industry or a energy distribution company or water distribution company, for example. So this software can be used in various scenarios where it can take not only inputs from our devices, also from other devices in the factory or in that environment, and can be used for analytics and making decisions, and can be programmed to whatever it is needed. So there are two parts of that. The software development itself is one, and the application, how you do it in different industries, is another one. So this company has got two different segments. Now, in terms of synergy, how it will help is, it will help us to sell our products more with a more value addition. So we are upselling. So that means we are going one step up in the in value chain. So it is like a forward integration for our products to sell it along with this software. And also they have a lot of clients where the software is being sold. So we can also sell our products to their clients through this chain. So we can leverage their software through our global network, because they have been a pretty small, local, very nice technology and product they have, but they have been only in Czech Republic, maybe a few countries nearby, but they never try to take this globally. So the value that comes out of this merger is that we take this product globally because of Rishabh's network, and also Rishabh's products will gain because we have got something which is much smarter to add it. This is second. Third thing is, because we have got very high caliber software engineers there, so we can use their expertise to in building some smartness into our products which are in the pipeline in the R&D. I hope I try to answer this in as simple terms as possible.
Thank you so much for the detailed answer, sir. That's quite helpful. That's it from my side.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Raj Mehta from Wisdom Capital. Please go ahead.
Yeah. Hi, sir. Good evening. So my first question was on the solar business front. So can you give us the more understanding on the solar business segment and how is the solar market showing trends post launch of new inverter?
See, all the solar market is growing in India as well as over the world. Only thing is, first our main solar, this thing, we call it as a solar string inverter. These are up to 100, 150 kilowatt single inverter. And then there are package units which go to 1 megawatt, 2 megawatt. But all the governments in the world, especially Indian government, is really focusing on making sure that the farmers also use solar energy both for the pumps so that the grid is not loaded. Otherwise, the grid gets loaded when the farmers start their pumps, and then they have to have a special separate grid to make sure that they can cater to the requirements of the rural folks. So all that is happening parallelly, and government is asking more and more people to give. But on the technology side also, a lot of developments are happening so that we are able to make sure that, because see, solar comes only during the day. Now, obviously, whenever the sunlight is full, and then evening 5 o'clock, 6 o'clock, 7 o'clock, depending on which part of the world you are, the light goes away. Whereas a lot of work is going on the possibility of having storage. Even today, storage is possible in a battery which you can use in the evening, but it's not cost efficient. So people are trying to make cost efficient storage batteries. But for sure, it's a form of renewable energy, except the solar cells which are created. It can go anywhere in the world. There are no big transmission lines. You can have local grids. So to that extent, solar energy is the future. Of course, people are working on many new forms of energy. But until that comes, I think solar is the answer to all the climate change and all the fears that people have on how climate change is affecting all of us.
Yeah, I'll just add some more points on what we are doing in Rishabh on all of this. So there is absolutely no doubt that there is a huge market in India, and the only thing is whether we can compete with the Chinese competitors, which are, as Mr. Goli also covered in his speech before, is subsidized, and the cost is a big driving factor there. So when we started with European technology, which was obviously much better and also expensive. So we have scaled it down, and we have made almost competitive with Chinese supply. In terms of range, currently we have got three-phase products ranging from 3 kilowatt to 50 kilowatt. That's the offering which we have. Now we are working on two sides. One is on the lower side. We are coming with this Uno, which is a single phase from 2.5 to 6 kilowatt. So this is with all these Prime Minister's schemes, Kusum, and a lot of schemes are coming, where there is a lot of, see, in India, there was a big boom of solar farms. Now it is coming to having smaller solar, and Mr. Gule also touched this subject, because what happens is, if you generate a lot of solar from one place in a farm, then storing and transmission is a challenge. So if you have smaller units like single phase 2.5K to 5K, you generate and you consume there only. So this is where the market is shifting. So that's why we are focusing on these low end single phase inverters, and that's one side of it. Second side is to expand our basket from 50 kilowatt to 150 is another one which we are doing, but we will cover this lower end first, because there we see a lot of momentum, and then we go to the other side of it also. In terms of business, we are almost doubling this year after year. So we see that we will reach about 100 crore turnover in about 3 to 4 years time, and we see a lot of potential. Now we are redesigning the products which we are already selling to reduce the cost of manufacturing, finding alternate suppliers, alternate components also. So that is a continuous process which is happening. So we have been able to reduce about 5 to 6% cost in the last quarter, but our target is to add another 15-20%, and that is going to come through a substantial design changes which we are doing in the product. So I think we have a very good future for solar.
Understood, sir. And sir, on the products front, what type of products are in the pipeline, and what incremental revenue can be estimated from the same?
So are you talking specifically for solar or in general?
No, the new products.
Yeah, new products. We have this whole. I've also talked and listed about that. We talked about this UL approved NC cities, a new category of cities. Then we talked about these MID certified meters. We talked about. Then we also talked about CD10 recorder series. Then we talked about earth testers and a lot of products. About 15 product lines we have. But we have these products in every segment, in all our industrial automation segment, then MCP meter and control segment, and test and measurement segment. Every segment we have got products lined up for development. It's like about having about 12 to 15 products coming out of our R&Ds every year is a normal job for us, and we keep on doing that.
Got it, sir. And sir, one last question on the acquisition front. That what is the update on acquisition of aluminum die cast business in India that was announced in previous calls? Is it called up?
We did invest a lot of time in that. We went through a lot of due diligence, and there were a lot of CPs which we spoke about, and the time to cover those CPs were going without any commitment. So I would say that it is on a back burner now. So we are not actively pursuing that at the moment.
Okay, sir, got it. Thank you so much for answering my questions, and all the best.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Somil Shah from Paris Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, can you please tell me what is the current revenue for the new company which we've acquired, this Microsys?
Yeah, it's not a large company. It's about $500,000 to 600,000 euros turnover. So that's the range in which it is. And we acquired it not for the revenue purpose. We acquired it for a technological synergy, actually.
Okay. So there won't be any, revenue potential through this acquisition?
So there will be whatever is there that will add, and then it will, in our opinion, that will boost our industrial automation products to be sold. So I will give you an example. If I sell, say, one power quality analyzer, one temperature controller, and 3-4 products, that sale can be like 400, 500 euros, for example. If that is sold as a system along with the software and an application, so that can be like 10,000 euros. I'm just giving an example. But you will not sell so many of those systems. Selling products is much easier because there are a lot of system integrators who buy and do that. So you get into those forward integration.
Okay. And sir, can you give any guidance for the current year on the revenue and EBITDA front?
So on the revenue side, we will be kind of I will put it two ways, because there is a big event about Lumel Alucas business which we talked about. So considering that, we may have a single-digit growth on the revenues, maybe about 8 to 10% from the initial, what we had forecasted about 18 to 20. Because the aluminum die casting, which also was projected to be around 20% growth, will be coming down to that's about 40% of our business. So that is that we are scaling it down. But on the electronics side of the business, of course, we will have anywhere between 15 to 18% growth on the electronic side of the business. On the die casting side, it can be flat. So it's 40% and 60% non-aluminum die casting, so you can make the maths. And so we are talking about something in the vicinity of 10% as a top line growth. On the bottom line, electronics business, as you can see, in spite of all the challenges we have delivered a EBITDA of around 16-17%. So that will continue. On the aluminum die casting side also, we have some uncertainty how this will come, and we want to get it to a positive tune. And of course, retrospective things may not change, because even if we have all the contracts agreed and price corrections done, they will be prospective, not retrospective. So in third or fourth quarter of this financial year going on, we try to at least get into a EBITDA of 10% minimum. So EBITDA to be at 10%, but it will not be retrospective. So we may have about 3 quarters which are already damaged. So annual numbers may not look so good, but our efforts are to correct it from fourth quarter onwards.
Okay. So this year we can expect a flat growth in terms of bottom line?
Flat growth in terms of what you say, sir?
In terms of bottom line. So it could be a flattish number?
Yeah. I think you are more or less, I'm afraid you're right.
Okay. And by when we can reach our previous EBITDA margins of 15-16%? I mean, by next fiscal, can
we plan them for the next financial year, for sure.
Okay. Thank you, and that's it from my side. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as the last question. I would now like to hand the conference over to the management for closing comments.
Yeah, thank you very much for the trust you have shown with us, and the market and situations are not uniform. They are always challenging. That is why we feel that as a management, we are here to make the best possible decisions under very challenging, uncertain environments. And we are believers. We are putting our best to get back on track, especially the aluminum die casting business. And we are very hopeful that it will happen. And we really thank all the investors who have faith in us and trusted us. And we will not let you down.
See, we are a technology company, and continuously investing in R&D, and sometimes we even break the barriers of technology in terms of finding new avenues where the products can be used. And fortunately, we are in a situation where the country is doing so well, everybody is positive, in spite of our neighbors not doing well. So although this aluminium, as we explained to you in the call, that the aluminium did upset us a little, but I think in any business, it is part of working. So at least we are not upset at all at what has happened. There has been some, let me say, uncertainties, but we will come over them. We have come over it many times if you see the history of the company. And going forward, it can't be much different. So we will come back with a vengeance and make sure that this 2 or 3 quarters which are not as good as otherwise, you see the growth every year was 15, 20, 25%. EBITDAs were constant. We'll come back with that.
On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.